Welcome to the Toronto Real Estate Podcast. We are going to get into the 20-minute market update of Fox Marin. First, we're going to look at what the hell went on in the month of March in the Toronto real estate market. My name is Ralph Fox. I am the co-founder and broker of record of Fox Marin. Today, we have my partner in crime, the absolutely fabulous Corey Marin. And we are just going to encourage you, because I always forget to hit that like or subscribe button. And if you have any comments, please be sure to put them down below. Corey, let's take it away. Time is a ticking.
All right. Well, the thing that's exciting about this report is that the data was just published this morning. So this is fresh off the press. This is all published from the Toronto Regional Real Estate Board. And we're looking back and reflecting on what happened in March 2025. For the case of clarity, we are focusing on the 416, so central downtown Toronto and surrounding areas. There is not a focus on the 905 or the 705 in this particular podcast today. So with that being said, let's jump in. We're looking at the monthly reporting year over year. We're dividing it by 4 asset classes, and we're going to walk you through what's happened in each of these particular segments. So in the detached home category, which would be considered to be the luxury market per se, the average detached home in Toronto has been selling for $1.7 million, and prices are actually up versus last year at 1.1%. Sales volume at 572 transactions is down 10.8% versus last year, meaning less detached homes sold this March than they did in March of 2024. In the semi-detached category, which Ralph and I predicted to be the very hot commodity of 2025, are doing quite well, averaging at $1.33 million. Prices up 2.6%. Expect that to continue to accelerate as we move through the year. Sales volume, 208 sales, but sales are down. Transactions moving through the system down 5.5% versus last March at this time. Townhomes, so walls on 2 sides, windows at the front, windows at the back. The average townhome just hovering under $1 million at $975K, down 2.4% in price versus last year, and down about 21% in overall volume compared to last March. And the last one, which is a segment within itself, and we'll get into that, condo apartments. The average condo is still $716,000 in Toronto, down only 1.8% in price versus last year at this time, which always surprises me every time I open up the market report. Sales volume is certainly down, and we're seeing transactions down 21.6% versus last year.
Woo, what a mouthful. But you can even see, staying along with our predictions, that semi-detached had the strongest amount of appreciation and showed the least amount of declines comparative to all the other asset classes.
Exactly. So let's look at all the home types here on this next slide. Sales volume overall, combining all asset classes in one category, is down 23.1%. So this is a bit of a repeating narrative in today's market update. So there's less transactions, less people are buying this year than they did last year. New listings, people trying to sell their home or condo, is actually up 28.6%, with a large majority of that being the condo segment. And we'll talk about that again in a future slide. Active listings, so listings that are sitting on the market, collecting dust and not selling month over month, those are also up 9.5%. So you're seeing a trend here. More is getting listed, more is sitting, which means more inventory, more selection for buyers out there, again, particularly in the condo segment. Now, the overall average price, though, and if you think of everything that the Toronto real estate market has been thrown at over the last 12, 16, 18 months, the actual average price is down only 2.5% overall, which, again, I always find so surprising every time I look at the report. And the average property days on market has actually sped up. So last year, in March of 2024, it took about 29 days in total for a property to sell. And this spring, March 2025, properties are taking 25 days. So a differential of 13.8%, which I found a little bit surprising as well. Ralph, do you want to speak to inventory? Because inventory is actually coming down as well.
So we're looking at months of inventory, which is something that we always track at Fox Marin. And essentially what that means is if nothing else were to come on the market today at the current rate of sales, how long would it take everything on the market to sell. So anything under 4 months is very much considered to be a seller's market. 4 to 6 months would be considered balanced, and anything over 6 months would be considered very much a buyer's market. So we always talk about this in comparison, but if you look at Manhattan, it's 188 days. If you look at months of supply, you're looking at about 7.8 months. So Toronto still is doing pretty well at 2.72 months. So as a whole, the market still is showing to be a seller's market. Although if you take a deep dive into the numbers, you'll discover a much different picture when you look at the condo market, which is really what's pulling everything down and has been for some time.
Do you feel that there's have been any change in temperature on the condo market so far this year, Ralph?
Yeah, a little bit, mostly anecdotal. What we've been seeing is throughout the last few months, maybe even most of last year, is the bigger, more end user, meaning people who were going to live in them, more desirable, unique condos were selling. And so that really hasn't changed. That's where the most of the activity is. And that's probably what's keeping buoyancy on the price per square foot and on the sales price of condos, where it's the little guys that are sitting. Anecdotally speaking, we are starting to see investors peek back into the market. A lot of cash buyers. We probably are working with 6 or 7 investors right now that are thinking about and starting to talk about and looking about getting back into the market, which is anecdotal and it's very interesting. And it might start to become a bit more of a signal that we might be approaching the bottom, something that didn't happen in 2024.
Exactly. And anecdotally as well, we've had some conversations with clients that have equity in their home. They've done very well in their jobs. They're probably in their late 40s, early 50s, have kids that are heading into university, and they're looking at the condo market thinking this might be a good time for them to pick up something for their child that will be graduating, I guess not child, young adult that will be graduating from university in the next 3 to 4 years, and perhaps scooping up a condo now would be a wise investment for their kids and their kids' future.
A lot of parents are really afraid that their kids may face affordability in affordability issues and never be able to afford a property in Toronto.
Which is probably 100% true.
Yeah.
All right. Well, moving on and keeping within our timelines, which I'm just so proud of us, Ralph.
I know, I'm sweating here.
So am I. But I always sweat on these podcasts.
Keep it going. We got to keep it going. Keep it going.
So what this report is, or this chart, I should say, is sales activity over the last 10 years. So when you look at this, it looks like a little bit of a scramble. It looks like a little bit of a heart rate check, which, of course, my heart is always beating from all the caffeine that I drink. But the sales is the blue line, and the adjusted sales is the orange line. And seasonality means that certain times of the year follow a regular pattern, meaning that Christmas time or January would just automatically be slower times. And if we were to do this as a line chart, you would just see sales, 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 dip, sales, 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 dip. And that is usually indicative of Toronto being winter, holidays, distraction. We always have a sales dip here. But what I find interesting when I look at the seasonally adjusted figures, focusing mostly on the blue line, you can see that over the last decade, we've just actually had our lowest month of sales over the last decade. This is the lowest amount of volume that has moved through the system in a decade. Does that scare you, Ralph?
I think it's actually, if we were to look out even further, it could even be 2 decades. Like, I know that we are in a very slow march, but I cannot, at least in my lifetime, remember the last time that we were facing reciprocal tariffs and an existential threat with the political domestically situation here. So it kind of makes sense that there's a little bit of a freeze in terms of transactions. Now, we're still transacting and we're still seeing activity in the market for sure. And if you look at everything that's going on, you might even think it would be worse than actually what it is. And to a certain degree, given everything that the market has had thrown at it from outside the market in terms of uncertainty, it seems like this is still a bit of a best case scenario. And I'm really impressed to see things moving as well as they are, given what's happened and what's been going on.
I 100% agree. Now, we both know that I'm the optimist between the two of us.
Oh, yeah.
But still, I'm still really surprised by how well the market is performing overall. And again, people viewing this, I'm not telling you should buy something. I'm not telling you need to do anything. I'm just reporting the news, the stats, the data, the fresh information. And I'm like, always just like, really? There hasn't been more of like a correction or some drastic change here. Everything seems to be moving along. And my theory about that is people still need a place to live. And I think people are freaking exhausted. I actually think people are like tuning out a lot of this noise right now. And they're just able to just be like, you know what? I need to live my life. I need a place to live. I need to take care of my family. I need to look after my well-being. I need to make sure I'm doing well at work. And I think a lot of people are tuning out the noise and focusing on what they need to do. I have no other rationale other than that.
And it's interesting because, again, anecdotally speaking, the last 10 days feels a lot busier than the first 3 weeks of March, which is interesting. So we'll see. Very much we'll see, but it definitely feels that way. Do you want to move on?
Yep, let's do it. So this is the home price index. So the home price index tracks how the price of a typical home changes over time, and it compares the homes with similar features so you can actually see how prices are really growing year after year, almost comparing apples to apples. So we're not comparing detached homes to a condo, or a year that tons of condos sold but only a few detached homes sold. It's kind of a nice enmeshment of this so that we can actually see true, authentic trend lines. Again, this comes from the Toronto Regional Real Estate Board. One day I'll be able to say that fluidly. And you can see here, so you can see how we were just climbing up, and then there was a massive growth period when interest rates were practically nothing during the COVID years. And you can see we've had that correction dip off at the end of this chart in the blue line. And now you can see over 2022, 2023, 2024, and as we move into 2025, there's a bit of a flat line, which I think is a good thing because we all know that prices are out of control here for most buyers. And so I don't think that's a bad thing to see, but it's also, again, surprising that we just haven't like fallen off some insane cliff.
Like, just looking at this, what's so interesting is I bet you if since 2021, or let's say early 2022, you could read the newspaper, the Toronto Star and the Globe, but just everywhere it actually referenced price, it would just be blacked out. And then at the end of that 3-year period, when you've come out of your capsule, you would then have to project, having been exposed to all the news and all the headlines, but not knowing the exact numbers, you would then have to guess where we're at. And I think you would probably guess that we were back down to about 2014 levels at around $500,000, which is just not the case. And so it's pretty amazing to see the market having performed as well as it has. I'd say it's overperformed, just given everything now it's had thrown at it. I mean, I don't want to jinx it, but what more can we do to challenge this market and to see the amount of resistance it's given in terms of its ability to withhold stress tests after stress test after stress tests, and price are remaining pretty constantly flat. Like every month when these reports come out, I'm just kind of like,
that's how I feel.
I'm like, no, it's fine.
I don't know. Me too. Me too. So I wanted to go over inventory because this is a very key indicator as to how the market is performing. And maybe we'll tell a little bit of a different story as we move beyond price and circle back to sales activity. So this first one here is months of inventory, referencing back to what Ralph was talking about with the absorption rate. This is the month of inventory per month using March 2015 to March 2025. And you can see where we were at our most compressed inventory in the detached home category in the 416. In March 2017, we had 0.77 months of supply. So 3/4 of a month. And you can see now in a category that's performing a little bit more slowly, and understandably, because that's the higher ticket price, we're hovering just under 4 months of supply in March of 2025. So this is really important to monitor. If you're working with an agent, I want you to be talking to them about months of inventory, because this is a lead indicator as to how the market is performing. And when you look at this chart, you can see, as I said off the top, we're starting to collect dust. less activity, more inventory, less sales. Prices are holding, but eventually something is going to break.
And what we are seeing is the great properties are selling, the not so great ones and the less than great ones and the downright awful ones are just getting punished.
And the tenanted ones.
Yeah, and so it's one thing. I know we're trying to speed up, but in a good market, it can correct bad decisions or bad purchases, and that's how people have gotten by for a very, very long time in Toronto. And now it's the people who bought well or took care of their properties or had professional advice and listened to it. Those are the ones that are actually continuing to do well, even during challenging times.
Yes, that's so true. So
Oh my God, I'm 16 minutes in, 16 and a half minutes. Okay, talk fast, Corey. You can do it. Bring it home.
Oh, that I can do. That I can do. Months of inventory, semi-detached. Again, this is where Ralph and I really think the market is going to take off this year. Really important chart to look at. You can see we were most compressed in March 2017 with half months of supply at 0.5 months of supply. And you can see now we're just hovering in March 2025, hovering under 2 months of supply, which is 100% a seller's market. So I do expect and anticipate this number to become more compressed as the year goes on. This category has been very competitive. Product in this category has been doing very well, particularly in hot neighborhoods where young families want to live and work. So I think we're going to see this get cut down even more as we accelerate through 2025. And then the juggernaut right here is a very important slide, condo people, to be looking at. And Ralph and I talk about this 7,000 million times a day, the condo market. So you can see here again, March 2017. I don't even remember 2017 anymore. Like, I honestly do not remember that year. It was when there was like 40 offers on everything. Half months of supply in 2017. And now, people, what are you seeing? What have you learned from this podcast? Where are we, March 2025? We're at over 6.5 months of supply of condo apartment inventory. This does not include condo townhouses. So, I mean, that is just a massive amount of inventory. We could talk about condos and what to do with your condo in a separate podcast. Not the best time to be listing your like little guy in the middle of a condo-centric neighborhood, especially if you have a 1-bedroom or a 1+ den. We'll talk about that in another segment, but a lot of the numbers that you're seeing are being influenced by this particular key indicator right here. And then let's just finalize everything and make our deadline, Ralph. These are the 5 key indicators. I want you to be super educated about where we are going in the next 6 months. These are the indicators you're going to be watching. First of all, we're expecting a Bank of Canada announcement April 16th. There may be a rate adjustment, but there's a lot of forecasts out there that interest rates are going to remain flat. There'll be no change to interest rate at the next announcement, but I want you paying attention to that because that will certainly change buyer sentiment and buyer psychology. We are going to be very focused on the federal election. When is the election? Monday, April 28th. Everybody, you have to get out and vote. Please learn about the housing policies from the key candidates. We did a whole podcast about this. If you're interested in that, we'll link it in the description below. It's a very important election. I want you to focus. Mortgage renewals hitting households. Everybody who needs to renew from 2020. It's approximated there's 1.2 million Canadian mortgages renewing in 2025. That may or may not have a hit to the market. I want you to be aware of that and be paying attention to that in the news. We need to be focusing on Canada's immigration targets and housing demands. This is also part of the federal election. Please make sure that you understand all of the parties' position on immigration, okay? And
or
finally,
lack thereof.
And then finally, seller psychology and market confidence, which is something that Ralph and I talk about a lot on this podcast. So these are the 5 things I want you to be paying attention to so you're hyper aware of what's going down. Ralph, any closing thoughts?
Thank you so much for joining us. Never a dull moment in Toronto real estate, and still never underestimate the resilience of the Toronto market. We will see if that holds true for the month of April. This is going to be a super interesting month. If you're watching this, please, this is such an important election. Get out and vote. I'm Ralph Fox. This is Corey Marin. Please be sure to hit that subscribe or like button, and we'd love to hear from you.
Bye, everybody.